Hey guys, Justin here from Simplified Investing. In this video, I wanted to put together a compilation of basically how to use level 2 and what is level 2. In my opinion, this is going to be the best indicator that you can solely use, and it accompanies all the other indicators that you use. So before I get started, if you could like and subscribe to the channel, it would be greatly appreciated. And then if you could check out our team at SimplifiedInvesting.com, we would love to have you guys. We did finish off the day again, 2 for 2 on alerts, and we have been 9 for 9 in the past week and a day. So basically, getting started, a lot of you guys use indicators, right? Whether it be EMAs, SMAs, moving averages, whatever these may be. The problem that retail investors and traders don't know right away when they get started is these are going to be lagging indicators, meaning that they typically happen after the move and they don't indicate the move right away. So an EMA line doesn't form right away off of the move. It's a lagging indicator. So is this TTM scalper alert here, right? Look, if we go in on a shorter time frame, oh my, this predicts the move every time here, right? Push up, push down, push up, push down. These don't form right away. This might not form till down here, and this one might not form till the move's already over. So you guys have to be cautious of that. A majority of these indicators are going to be lagging indicators. There is no sole indicator that's going to be perfect 100% of the time, and trust me, if there was, everybody would know about it and every single person would use it. So how can you supplement these indicators and utilize level 2? That is really what I'm going to be covering today. And in my opinion, level 2 is going to be the biggest thing that can help you take your trading to the next level and actually feel like you have a grip on trading rather than just entering in it feeling like gambling. So getting started, Thinkorswim platform here. What is level 2? So level 2 right here, you click level 2. Basically, you see bid and ask. So bid, think buyers, ask is going to be sellers. So what do you see right here? These are all going to be all the buy orders waiting on SPY in this case, and these are going to be all of the sell orders, right? So now going from here, BS and AS, these are going to be the size of this. And this is a key component to trading, right? So the biggest thing that you can get from this is obviously you are going to be looking at this. Are they going to be a lot of small orders, right? Look at 1, 2, 2, 2, 2. All of those small orders are going to be retail traders more often than not. And now how can you distinguish that from institutional? When you look at institutional buyers and large orders coming in, those will be large orders, whether it's 100, whether it's 200, whatever it might be. Institutional orders are going to be a lot larger than that of just a retail investor, right? And the thing to think about is going to be, you have to think like a retail investor. So say we're trading something like HD, right? Or whatever, Zoom, for example, and you see a lot of retail interest coming in, a lot of stack size orders of 1, 2, 1, 1, 1, 1. You have to think like a retail trader and understand this, meaning that what does retail typically like to do? They like to buy things that are running up, so that gives you already an advantage right now. You see, hey, retail is taking control of this. They are typically going to be buying things that run up, right? So how can you play that? You can ride the trend, wait for a pullback, and enter there. Or are you looking for something like institutional? That rule doesn't quite apply. Another thing with retail is that they typically like to panic sell. So if you see a big red candle, you can expect more and more panic selling to come in here on the ask size here. That's just simply going to be the mindset and the difference between institutional and also going to be the difference between retail. That is going to be a key component in helping you guys understand who is dominating the stock. This is going to be a little different because this is a market ETF, but look at that. Look at this for your individual plays on the day, whether it's going to be Apple, whether you're trading Zoom, whether you're trading Roku, whatever it might be. Get an idea of who is making this move. Again, always follow the smart money and understand who is making this move on this individual equity or on this ETF underlying here in this case. Again, what I typically do with these is watch for orders stacking up either at support or resistances. So map out these support and resistances, which we do have a video previously on how to draw them. Map these out and get an understanding of, hey, where are these support and resistances? Now, here comes into what I do. How do you utilize this? You want to see a lot of buy orders stacking above a resistance, right? And you also want to see a lot of buys coming in at a support if you're looking for calls. Now, if you flip that and go to puts, you want to see, we'll take this 339.08 level, for example. You want to see a lot of asks stacking up at that 339.08 level here, and that will confirm that strong rejection, right? Now, what do you do on top of that? You also want to follow volume, right? You don't want to just play this and just watch this all the time. Watch this volume in the back. As I constantly tell our members, volume, volume, volume. You have to follow volume. That is going to be a key indicator that not many people discuss on those moves. You want to follow volume. You want to have the liquidity, especially in the options that you are going to be trading. Again, you want that liquidity. Now back to support and resistances. You want to see, if you're playing calls, right, you want to see a lot of buy orders either stacking at a key support, in this case this 337.96 level, or you want to see a lot of buy orders confirming this breakout with bigger sizes, institutional coming in above 339.08. Prime example right here, SPY is just one example. Now, you don't have to do this just for the market. Again, you can do this on individual equities before you buy. Again, before you get started, make sure you understand who is going to be trading that. Is it going to be retail, institutional? Distinguishing between these two is going to be very key. So now you have these levels, right? The biggest thing is we can go on the 5-day, 5-minute, 5-minute as well. 5-day, 5-minute, excuse me. You don't just want to say, oh, hey, it's breaking right here. I just want to play it, right? You have to follow volume and wait for a pullback to enter. Don't get the fear of missing out on this uptrend move here. Hey, a gap through. Wait for that pullback, confirms, and then enters here. Also watch volume. One thing I see is when people start out with level 2, hey, I see a lot of this buying above this level here, right? They don't wait for confirmation, boom, false breakout or breakout to the downside, right? You have to wait for confirmation. Don't just chase just to make a trade, right? So in this uptrend here, wait for this pullback. This is going to be a better entry in this break here, pullback entry up here, than just chasing it right here because, hey, it broke above this level here with some volume, right? So again, follow volume, understand who's in control of that equity, for example, understand this bid and ask size and where this is coming in. And the biggest thing that you can do is going to be watching the trend, waiting for a pullback, and entering on the pullback. Again, I can't stress enough, I've already said it before, but what I see is people chasing plays because they're getting so nervous when it does break through with volume. Wait for a pullback and a better entry here. I personally use the 5-day, 5-minute, 5-day, 15-minute to enter into scalps. Some people do use the 1-day, 1-minute. Now, the biggest thing that I recommend here, or the thing that I advise of, you'll notice using the 1-day, 1-minute is you will have a lot more false breakouts in your entries and you won't be able to monitor as closely. So what can you do in that aspect is increase the time limit. So increase by the 5-day, 5-minute, and now you aren't concerned with every second tick, right? It doesn't make no difference if 1 second tick is down, breaks this level, 1 second tick is up. Now you just sit and watch these candles form. You don't sit there and watch every second move, every 10 seconds, whatever it might be. You can simply watch these longer time frame confirmations, and then it will also help you get, you won't get falsely broken out as much. So again, basically what you do, bid and ask, buying, selling, you watch these to stack up near support and resistances, understand the key component of who is driving this price, who is in control, is it retail, is it institutional, identify that, see something either in a strong uptrend and pull back to enter, or a strong downtrend, retest, and then enter. Don't chase something that's pushing down just because, hey, I have the fear of missing out on this, this trade, for example. Again, if you guys found this video helpful, if you could like and subscribe to our channel, it would be greatly appreciated. And then if you could check out our team at simplified-investing.com if you are interested in getting our course material, our daily trade alerts, our live streams, and more, we would love to have you guys on board. Hopefully you guys all had an amazing day and look forward to trading with our members tomorrow. Thank you.